Hello, everyone, and welcome to the third and final day of our ABAC Digital Symposium, Accessing Innovation to Reopen APAC Trade and Markets. I'm Jan De Silva, Canada's representative to APEC's Business Advisory Council, or ABAC, and the 2021 chair of ABAC's Digital Working Group. Exactly 1 year ago, COVID was declared a global pandemic, a global health crisis that triggered a global economic crisis and created an imperative for contactless and digital solutions to enable our markets and businesses of all sizes to continue to function. This symposium was inspired by the work of our Business Council, as over the past 12 months, we compared notes and considered solutions to mitigate COVID's impact on our businesses and economies. We felt it important to share emerging best practices with you, an invited audience who have the interest and capacity to adopt and apply these innovations in your markets. As a business council, we believe that reopening our economies is not a winner-takes-all race. The more countries that bring workers and customers back, the faster our connected global marketplace will recover. On day one, our symposium opened with 4 APAC ministers discussing the COVID digital revolution as both an opportunity to level the playing field and market access for smaller nations and businesses, and an urgent challenge to secure collaboration on interoperable regulations and data sharing across nations to create a digitally enabled APAC. On day 2, our discussions with innovators and solution providers first tackled the reopening of business travel. It was very clear the solution has to be digital and with a globally adopted standard. While the technology is pretty much ready now, public trust in data sharing differs by countries. This will constrain the ability to deploy technologies at scale and may well give rise to travel bubbles in the early days of reopening travel. Our second very energetic discussion shared a range of very practical approaches that are supporting the digital transformation of MSMEs. Talk about transferable learnings. This session was jam-packed with them. And today we tackle digitalization. Oh heck, in Canada we just call it digitization of our trade and supply chains. And finally, sustainable infrastructure innovations will close out the symposium. So shall we get started? Trade and supply chains have certainly been disrupted this past year. WTO reported a 14% decline in global merchandise trade in the second quarter of 2020 alone. 2 key challenges are the complexity of trade transactions with various cross-border and regulatory regimes, and managing the high volume of paper documents required in almost every deal. Over the past year, the pandemic highlighted these weaknesses. Digitization is the solution for these pain points and more. Digitizing paper-based transactions can fortify supply chains, helping businesses highlight human error or discrepancies. Receiving real-time updates on transaction statuses supports better working capital planning. And no discussion about digitizing trade is complete without blockchain. By using encrypted data and ledgers, blockchain introduces new levels of speed, transparency, resilience, and security to the trading process. In fact, last year, the World Economic Forum called digitization the single most efficient approach to reducing trade costs on a global scale. Now, these savings are not inevitable. There are steps we need to take now to support a technologically reinforced trade recovery. Governments must lead on regulatory and legal frameworks for digital trade, and some are ahead of the curve. Singapore, for example, has created a one-stop trade and logistics ecosystem, bringing together players across the value chain with tools and services to serve businesses' end-to-end trade requirements in a single platform. Businesses themselves also have to transform, and fortunately, our businesses don't have to go it alone. Global agencies and innovators are helping our businesses rethink their digital blueprint, including our next panel of experts. Here to introduce them and moderate the discussion is Managing Director of the International Chamber of Commerce's Digital Trade Standards Initiative, Oswald Coiler. Oswald, over to you.
Thank you so much, Jan, and thank you for that introduction. It's great to be moderating this discussion. What a fantastic event. I really hope the audience enjoys the panel and the rest of the day. 2020 was a difficult year, and we've all seen major changes. The pandemic tested the resilience of our trade and supply chain processes and tested the practicality of our business continuity plans. In the beginning of 2020, we had the peak of our age of transformation, productivity, and continuous improvement, translating into optimized working capital positions, reduced inventories, optimized cash flows, and optimized payment terms. Shortly after this, we began to transition into a new reality. This new focus became on saving as many service providers and suppliers in our supply chains as we can, saving as many jobs as we can, and reducing the social impacts of COVID, and dealing with shipment delays and fraud caused by our resilience on paper within our trade and supply chain processes. So definitely a difficult year. And where are we now? Well, we're in 2021, well on our way. And we're now at a point where we've seen a maturing in our global capabilities in regards to digitization. We know more now than ever on how these technologies can actually help enable more reliant trade. And we're better equipped now than ever to actually use them. And I think most importantly, we also now have a bigger appreciation for the role that trade agreements and regulatory changes can actually help in the process of facilitating the transition to trade digitization. And helping provide all of this thought leadership is definitely the Asia Pacific's Financial Forum for Digital Trade Labs, a leadership position today valued more than ever. With that, it is my absolute pleasure to introduce our panelists. Following our conversations, we're going to be taking questions from the audience. And if you have a question, I really encourage you to submit it at any point using the Q&A feature. Also, start thinking about which speaker booth you want to join within the hour, as they will be opening up shortly. Now, firstly, to kick off today, we're going to start off by hearing from Louise Taylor-Digby, the head of trade strategy at Swift. Louise joined Swift after spending 15 years in commercial banking with experience across different countries, products, and disciplines. She is no stranger to driving large and complex partnerships within financial institutions and across the regions of the world. And I personally would argue one of the thought leaders in trade digitization. So welcome, Louise, to this panel. I'm going to kick you off with the first question of the day, which is, give us your view on the state of trade digitization globally.
Thank you, Oswald, and thank you for having me today. Very much appreciated. So look, I think in the first instance, we have to be clear that trade digitization is a huge definition. It can mean very many things. We're actually talking about an extremely complex ecosystem. And on the whole, I would say that digitization has been slow and it's been challenging. Here in 2021, we have hundreds of platforms, frameworks, value-added services, all ultimately trying to hyper-automate and integrate and digitize trade. But there is no one-size-fits-all, because this is an extremely complex ecosystem with different actors, different rules, different regulations, different products. And of course, it cuts across multiple different industries and jurisdictions. So what we're actually seeing is mass fragmentation of solutions that all represent fantastic examples of innovation and progress. But actually, they're creating digital islands because they are fragmenting standards, identity, and security protocols for the users. So the energy and innovation in the sector at the moment is just remarkable. To your earlier point, Oswald, I think, COVID has certainly been a compelling event for trade digitization. And the energy is audible, and there's some fantastic innovation out there. But the reality is, for buyers, for suppliers, for financial institutions, they're actually dealing with this, plethora of different digital islands that they have to try and integrate, risk assess, control assess. And as they use different standards, different identity protocols, different security protocols, it's actually creating a lot of work and actually limiting some of the progress. The other thing that I would say when we look at the state of digitization globally is we still have legal uncertainty around the acceptance of electronic transferable records. And that, in combination with the lack of standards, serves as a fundamental barrier. And this is challenging because although the need is explicitly clear right now with COVID for trade digitization, we have to be realistic that banks, corporates are also under extreme pressure to justify budgets at the moment and demonstrate return on investment.
That's such a good point. And so when you think a bit about, companies taking up digitization within their business continuity plans, in some countries like Singapore taking up MLETR from Untitled, is it enough, or do you think more should be done?
So look, there are some remarkable signposts, right? You've got the United Nations model law, which gives us that umbrella framework. Singapore's adoption of MLETR through the Electronic Transactions Act earlier this year. The UK Law Commission has work underway. The RCEP talks about UNCITRAL model laws. And of course, I would also argue that the establishment of the Digital Standards Initiative is also a fantastic signpost. But to answer your question, Oswald, I don't think it's enough. These are all outstanding achievements in themselves. But of course, trade cuts across multiple different borders and multiple different industries. And so we really desperately need to see more work on standards and interoperability. And increasingly, I think we need to see more work on education to help people to understand what some of the root causes of the limited progress actually is.
Thank you so much for that, Louise, and I fully agree with you. With SWIFT being at the center of banking, you're very well positioned to help accelerate the digitization of trade-related documentation. Has SWIFT taken any steps in this area in the last year?
We have, yeah. So, moving data safely and securely is in our DNA, right? That's what we've been doing for decades, not just in trade, but across payments, across securities, and FX. And when the pandemic really started to bite around this time last year, our executive committee basically approved the use of the SWIFT platform to transport trade documents for both banks and SWIFT connected corporates for free. And we're still doing that now. So as a cooperative, we're not driven by profit. So we're able to come out and say, look, we will move trade documentation for you safely and securely across over 200 countries, and we'll do that for free. But to my earlier point, Oz, it's not enough in isolation. The other thing that we did as well was we announced in September a collaboration with Trade Trust, which has come out of IMDA in the Singapore government. And we are collaborating on trade digitization with Trade Trust because poignantly, this represents a multifaceted approach to trade digitization. It's not just another trade platform. It's underpinned by legal reform. It's underpinned by international standards.
And that's an area where even the ICC is quite bullish on leveraging trade trust. So Louise, recently, when I looked at my LinkedIn feed 2 days ago, I saw some work that SWIFT recently announced around KYC registers that you've done. Can you give us a little bit of a view of what you've done and why?
Yeah, absolutely. So we, as an industry cooperative cutting across over 200 countries, we respond to the needs of our community. And it became very clear that there was mass friction and fragmentation in the KYC process. Corporates were having to give different sets of documents compliant to different sets of standards to the range of financial institutions that they dealt with. So we set up a KYC registry back in 2014 to help solve for this. It was initially set up for financial institutions, and in 2019 it was expanded to corporates. And you may have seen in the press over the last couple of days that we've now integrated the ICC's Sustainable Trade Finance Guidelines And that should make it much easier for financial institutions to be able to identify environmental, social, and governance risks. It really does aim to provide increased transparency when people are trying to assess sustainability. And if you're a corporate, you no longer have to go through that painful process of providing multiple banks with multiple formats. It's a single form. So essentially, together with the ICC, we're helping the world to standardize ESG due diligence. So thank you, ICC.
Well, thank you for that, Louise. And please stay online. We'll get back to you a little bit later in the Q&A session. Again, a reminder, any questions you might have for Louise, do feel free to pose them in the Q&A session. So next, I want to welcome Jean, the CEO and co-founder of Tradle, into the conversation. For those of you who don't know, Tradle uses AI and blockchain to digitize Know Your Customer or KYC information. And at the helm, Jean applies his extensive distributed network experience, including running a global supply chain management company in the past. So we're glad to have you on board, Jean. Welcome.
Thank you, Oswald. I'm glad. I'm very happy to be here.
Oh, thank you so much. So Jean, we might have a few viewers online today that aren't too familiar with Tradle. Can you give viewers a little bit more insight into what Tradle is?
Thank you. As you said, Oswald, about 6 years ago, I was running a supply chain management company that was running across 20 different countries, supplying paper to print, Financial Times, Guardian, Telegraph, and other major titles. And just about that time, I saw the blockchain appearing on the horizon. And it dawned on me that this is going to be game changer for distributed business networks. And this is where I decided to start a new company and focus on using blockchain for that. And I asked myself, what would be the right name for that company? And I kept rolling off my tongue, Tradle. And that was the first step, to name the company Tradle.
Oh, that's perfect. Thank you so much. So Jean, the Asia Development Bank did a study in 2017 on the trade finance gap. And if you have a look at the results out of that study, about 50% of the reasons why people got rejected for financing was either KYC or documentation concerns. Is this specifically the space that you're playing in? Can you give us a little bit more information?
Sure. Look, when our team started working on managing trade on blockchain, we wanted to, as quickly as possible, to rebuild everything we've built before onto this new platform. We started with the trade partners, their identities. As you know, that the next word is KYC. And we started working on it, and we thought that in a year from that, we're going to be working on order documents and bills of lading and warehouse receipts like in the past. But 5 years later, we're only now starting to go in that direction, because KYC, it's known to everyone nowadays, it's a beast. It's really, really complex. And that's why a lot of trade initiation falters right on that first step.
And so, Jean, on that point, because of that complexity, costs associated with doing KYC is high, too high, actually. So when we think about platforms like yourself, what's your secret to actually helping in that space bring down costs and help solve for KYC in a new and exciting way?
Sure. It helps to give a little bit of background. In about 2016, there was a gold rush of KYC on blockchain companies. There was probably about 100 started at that point for this particular purpose. All of those startups quickly have found out, and we as well, have seen that to win in this, to win the KYC in the marketplace, you need to satisfy regulators. You need to satisfy regulators for different type of financial products, for different type of customers, large corporates, small corporates, individuals. You need to satisfy them across different jurisdictions. And you need to work not only with the regulators through their processes like regulatory sandboxes, which we participated in, but also with the development banks like World Bank, Inter-American Development Banks, regional development banks, and others, and with ABAC, the intergovernmental organizations. And for a lot of startups, that was a true tool of an order. And many of them who started at that point are not with us now, today. And then another challenge appeared on the market in about 1920. Data locality became a big, big problem. Not surprisingly, when the US president at that point was using any kind of leverage he could for trade, and if the data is in the hands of one centralized KYC company, and at that point Bloomberg and Thomson Reuters were still doing KYC, not anymore, a lot of governments didn't feel easy to give all that sensitive data, all that important personal and company data to the hands of the one entity. So data locality started becoming equal to self-sovereignty or country sovereignty. And therefore, a blockchain was really, really a good fit because it was a decentralized solution without one central database. So those are the challenges. But obviously, the biggest and the biggest of them all is the variety. The kind of facets that you have to handle in KYC requires a platform that is able to define structured digital documents, define rules, define protocols, define the complex workflows, ability to execute those complex things and report on them to the regulators in such a way that data is not shared too freely, because banks don't want all of their data shared with the regulators. Neither regulators want to have all that data because they can be hacked as well, right? So all of those things add complexity. So the secret sauce that we've developed is the e-policies or digital policies that allow to create the formulation of documents, rules, workflows in one package, separate from our product, and that those e-policies are agile. They can be modified by the customers at any point in time. They can be modified for different segments of trade, for different types of customers, and this gives extreme flexibility. And of course, those e-policies, they require communication medium, sort of like a WhatsApp. WhatsApp messages cannot be presented in court later on. So they require a transactional WhatsApp. So we had to add that too. That's another piece of the secret sauce that we added.
So I must say, Jesse, that's fantastic. I have a last question for you. It's a big question, and we have about a minute. We've been trying to digitize trade now for a few decades, actually. Big question, why aren't we done yet?
I guess my short answer would be not all components of technology were available at that point. So we had the internet, and it gave us global connectivity, but no guaranteed delivery and persistence of messages. Then came the blockchain that gave us that plus global accounting, so that trade can be reliable and trusted, but no on-demand compute for processing a lot of data, especially those that are coming from sensors now in trade. So for that, we needed cloud. Now we have cloud, but then we needed AI. AI is replacing our eyes to recognize things like faces, equipment, damages, even paper documents, so that we convert them and make them digital, OCR. So without AI, we couldn't digitize that last mile of trade. And of course, the biggest enabler of them all probably is mobiles. The mobiles globally to billions of people gave us that transactional medium, that mechanism to execute trade anywhere you are on the planet. So all of those 5 things together, now we actually are at the point where trade has a chance to be digitized.
Thank you so much. And perfect overview of that. So next up, it's my pleasure to go over to Jesse from Montego, the CEO. So when Jesse founded Montego in 2018, he achieved a technological milestone by deploying the first enterprise blockchain network used in day-to-day operations by the financial services industry. Monteco's secure finance network is focused on solving fraud issues in trade finance and has continued to attract a whole host of multinational institutions. So welcome, Jess. It's good to have you. So Jess, for some of the viewers who aren't too familiar with Montego, where did you come from and where are you heading?
So we actually started in approximately 2016, 2015. The 2018 number was the launch of our secure financing network in India. I've been doing technology startups for about 20 years, done some mostly disruptive things. If you ever watch a video online, you see an advertisement in front of it or in between it. I invented how that works back in 2004. Much like the ad business, I knew nothing about financial technology when I started Montego with my co-founder, Patrick. We were initially looking at how you could use digital currencies for money transfers and currency conversions. Upon talking with banks and central banks and compliance departments, we quickly learned that that was not really ready for prime time yet. From a technical perspective, it was there, but from a regulatory perspective, there was a lot of questions. So we did the classic startup pivot and started to look for, what are areas where this technology could be really relevant. And obviously, financial services came top of the heap. In 2017, we were working with a number of banks in India. And there was a lot of questions there. To Louise's point around education, there was a lot of education that needed to be done and still to do. So the Reserve Bank of India put together a working group to come up with a white paper of acceptable applications of blockchain technology. We put together a couple of trade use cases around trade finance for that, and started on our way. A lot of companies in the space like us were just sort of throwing spaghetti against the wall and seeing what would stick. We were lucky enough to come across 3 exchanges that were in the invoice financing space, and they had the problem of double financing across them. It's permissible to take the invoice to all 3, but the problem is that when it gets financed on one, the other 2 no. So that was kind of the genesis of that first product. We've since evolved quite rapidly. We have a multinational presence, a team in Singapore, India, New York. I'm actually based in Thailand right now because of COVID. So yeah, that's where we came from. Where we're going is a continuation of this digitization path. I think that we're in the very early stages of it. People are just seeing what the possibilities are. So yeah, there's a lot of work to do and a lot of fun stuff ahead, I think.
That is so true. And so when I go to the Montego website, I actually see quite an inspirational message there, which is the future of financial workflows. What is the future of financial workflows, Jesse?
So it's interesting to me because, again, I mentioned I was never involved in the financial services space before this. I've done mostly consumer tech or B2B tech and the media side of things. As the internet revolution came along and as smartphones came along and we all got really used to depositing checks from an image on our smartphone and being able to transfer money instantly, you kind of got the feeling that potentially on the bank-to-bank side of things or the bank-to-business side of things that things had moved along that nicely as well. It's not really the case. In the case of commercial paper, which is a corporate issuance, one of the large banks that we worked with doing one of the first issuance of commercial paper in India used to use Excel files to track these things. So it turns out under the hood, there's massive reconciliation problems. There's massive data discrepancy problems. There's massive even just lack of capabilities around how to build complex workflows that instantiate regulatory requirements and do it in such a way that nobody can really monkey with the system. And the other piece that I think that's important there is economies of scale. As these applications become more and more standardized, whether it be a trade finance scenario or a KYC scenario or any of these other things, the economies of scale of having standard solutions, it just outweighs everyone trying to build these things on their own. So,
yeah, that's a perfect way of looking at it. So digitization of documents in trade, especially title documents, have been quite a challenge. But more recently, we've actually started seeing a few countries adopt model laws like MLETR, which enables electronic records within different countries. Does any of these steps help companies like yours, Jesse, in the whole digitization journey?
Yeah, so I think there's a couple pieces there. One, we also provide digital workflows for banks along a number of different product lines, similar to pretty much every other blockchain company out there. Obviously, there are geographic niches and financial sector niches that we all play in. So that obviously provides us with the opportunity to create these workflows, to have these digital records. But the other piece that's interesting from our perspective is we've got the secure financing product, and it also, in addition to being able to check for duplicate financing, it also authenticates against data sources. So, for instance, in India, when somebody comes to check an invoice for financing, we don't just tell them if it's been financed twice. We actually go and check with the tax authority, the Goods and Services Tax Network, to verify that the invoice exists in there. So as more and more of these things are digitized and legally blessed, and there are APIs available to it, it becomes that much easier for us.
And solutions like yours really help, solve for that trade finance gap that we've read about 2-3 years ago from the Asia Development Bank. Thank you a lot for that. We're going to transition over to Yoshiro now. Thanks a lot. Just a reminder, you can submit questions using the Q&A button on the right. So if you have any questions for Jesse, please do submit them right now. So rounding off the panel, we're going to move to Yoshiro, General Manager of the Mitsubishi's UFJ Research and Consulting Company. He joined the firm following a 30-year in commercial banking, having worked in both Singapore and Bangkok for over 20 years. He carries a vast experience of the Asian region, and we're glad to have him with us today. How are you, sir?
I'm good, thank you.
Perfect. I believe you have a slide or two that you want to share with the audience today.
Yeah, I think my position is a little different to the other panelists. We are a research company, and basically, if you can move on to the first page, actually, the background. I think everyone can see this. Can you move on? Next page. Can we have next slide, please?
Let's see.
Can we get the next slide?
So, Nicholas, can we get the next slide? I can hear Yoshiro quite well.
You can hear me?
Yeah.
Okay. So we are, pronounced it correctly, it's Mitsubishi UFJ Research and Consulting. We call ourselves MURC, and we are the research company and think tank and consulting of the Mitsubishi UFJ Financial Group. So basically where I am actually is that we are a research company, and we were hired by the Japanese government to do a research study on a possible regional digital trade platform for the ASEAN region. So I think today I will share just the essence of the report. It's going to be I've actually summarized into a few bullet points. I think today's objective is to share the essence of the report in the hope that it can be of reference to the members here for future consideration of a digital platform in ASEAN. So if I may go on to the next page. Let me very briefly go through the essence of our report. So first thing we did is we basically conducted interviews on 2 companies and governments of the ASEAN countries to do a survey to check, how everyone feels about the current issues on trade procedures. And obviously, the voices were that a lot of people were having problem with the paper-based trade because of the complex and unnecessary duplication and costly and time-consuming process. There were concerns about fraud, delay, and loss of trade documents. There was also expectation towards a digital trade platform, but we felt that the general understanding and knowledge about such digital trade varied amongst various people. Not everyone was kind of like on the same level. Next page, please. So in our report, we also touched on the effect of introducing a digital trade. So there was a proof of concept experiment conducted in Japan in 2019, where we took some LC-based trade, and we used a protocol digital trade platform to exercise this trade. And the result basically was that there was a 44% cost reduction in the processing time for the letter of credit trade.
Wow.
So the calculation of all this, actually, I've attached in the annex of this particular presentation, and I'm glad to go over them later in the speaker booth. We don't have much time today, but let me just tell you that the cost reduction here is basically, time is money. So the less time it took, we consider is a cost reduction. So obviously, by digitizing trade, you don't have a lot of things are automated, such as checking things. We don't have to wait for the bill of lading to arrive. Things like this. It reduces time greatly, which translates into cost because of people personal cost. So that was the result. And our objective here is to just mention that digitization of trade can actually reduce costs greatly. And the figures actually say that. So next page. So what we did is we basically calculated these cost reductions into country-based figures. What we did is we took the we estimated we got numbers like number of transactions in that country for 1 month, and because you need a partner to execute, so we took the number of trade transactions of that, how much is actually with Japan, and we kind of calculated the time that was reduced and multiplied by the personal cost in that country, and basically came up with the figures as you can see on the screen. They do vary quite a lot from from Indonesia 0.3 million to Thailand's 19 million US dollars per month, basically cost saving we calculated. These costs would be a lot larger actually if we took in the whole global trade, because this is only with a portion of Japan. So I think if we can expand the figures to that level, obviously the figures will be a lot bigger. So that is basically the essence of our report. That was supposed to be my last slide, I think.
Well, thank you so much. And I just want to say, again, for anyone who wants to get further insight into the report, please join the speaker booth. You'll have direct access to Yoshiro and be able to ask some really great questions. Great results on that. I have a small question for you, 1 minute question. We've heard some great insights from, Louise, Jean, and Jesse, just on how digitization helps when it comes to trade. From your perspective, what's the one thing you think is holding us back that the audience members can consider help solve for?
Well, as I mentioned, there's obviously going to be a lot of benefit if we digitize trade, the cost reductions. But personally, I think it's the momentum. To digitize trade actually requires a lot of change in laws and regulations to accept things like, electronic documents, electronic signatures and stuff like that, things that we are traditionally not used to. And it involves a lot of government support who have to go and change regulations, etc., from scratch. I believe that this is one area that a lot of people have been having difficulty over the years. It's not easy, obviously, but it takes a lot of effort and determination to make these kind of changes happen. And I do believe that the same efforts are being made in Japan also. And Japan, is a very bureaucratic country, so it's very difficult to change things here.
Mm. Well, thank you so much for that. I really appreciate your insight. Let's welcome back all of our speakers back for a group conversation. Again, as we're bringing them back, friendly reminder, you can submit questions using the Q&A feature. And if your question doesn't get answered just purely because we're running out of time, please do join the speaker booths. You'll have access to the great speakers later on. So I'm going to kick us off with our very first Q&A question. I've received some of the questions already from our fantastic team helping behind the scenes. And let's potentially start off with the very, very first one to Jean. So Jean, there's a question for you from the audience, which is, how can we agree a standard data collection process that are liable across borders, considering that not all APAC countries have FTAs between each other and law changes between borders?
It's an amazing question, because the way we were discussing it with Jesse before this panel is that, first of all, you don't be fundamentalist about technology and how it can operate in the real world. You create bridges. So, for example, when we were digitizing even 15 years ago in supply chain management for newsprint, we were sending paper documents after we signed all the deals in the digital format. So the paper documents were available, but later on. And people got used to digital processes and then dropped the paper documents. So to give you an example from today, when in the countries that don't have digital signatures, you do signature on screen and you show the regulator standpoint validation why this is better than the signature on paper, and you prove it to them how it is better. Then you show that it can be exported in such a way that it can be presented in court and defended in court, and how you're doing the important things of binding a person by scanning their ID, matching it to the selfie, a photo and ID to the selfie, binding it to the digital signature, binding it to signature on screen, so that it can be presented in court and defended reliably in court. And you do things like this. You work through the regulatory sandboxes, and right now, the one going on right now is called GFIN, the Global Regulatory Sandbox, with 62 regulators, and more are coming to the plate, where they're examining all those things and adopting those methods, even if the country does not have a particular law, but the central bank has an ability to issue a circular. That would be an intermediate measure before the law comes online. So all of those things, like apostillization that doesn't need to be on paper anymore, we can have registries of all the valid notaries in each country and validate their numbers and validate their signatures and validate their IDs, so that the notarized documents can actually be accepted in a digital form in trade. Things like this, the mapping to the real world. And this is where the such technologies as AI and blockchain provide an absolutely immense value, and we didn't have them 5 years ago.
But that's some really good insight. I think the next question I want to ask is to Jesse. Jesse, let's pull you into the conversation. One of the key issues, Jesse, to address in many of the countries is informal businesses. How do you think your technology can be applied to support us in order to bring the informal market into properly registered and reporting businesses?
So it's a good question, and I think, you know, digitization is the key forward here. So one of the things is, if you're an informal business, all cash business or barter trade, things like that, you don't have access to credit. You don't have a credit history. Maybe you don't even have an identity as a business, and so that presents challenges as you want to grow and scale. And, you know, I think that a lot of these informal businesses do tap into credit markets, but they're usurious credit markets. You know, when they go and need to borrow money, they get really ripped off. So, you know, by educating and by making it easy on the KYC front for these folks to be able to actually open bank accounts, for them to start enabling a transaction history, which would enable them to access other financial services, both personally and as part of their commercial entities. These are all the elements that will bring informal businesses, people who are unbanked, into the banked world, and everything, as well as linking that to government services. So if you've got aid payouts in certain regions, or welfare, or anything like that, by requiring a digitization like that, I think they've done in India in certain cases with Aadhaar, you sort of enable this richer life for these people. So it's a matter of making it simple, making it attractive to them, and then that will definitely bring the businesses into the registered world.
Thanks, Jesse. And I saw a study actually recently that highlighted exactly what you said. A lot of these informal businesses, when they can't get access from traditional institutions, still end up getting access, but the rates are just horrific. So this is where, providers like yourself and Jean really give me hope for where we're heading. So Louise, let's pull you in for a quick question. So Louise, when we think about these solutions, when we think about Swift being able to transfer documents, between banks and corporates, and we think a bit about the solutions that Jesse and Jean has and the results that Yukiro shared with us, what do you think we should do so that we can actually scale these solutions across the Asia Pacific region? What are the barriers that exist that we need to really just focus on and get out of the way?
It's a great question. Thank you, Oswald. And, when we go out and we talk to banks and corporates and we say, look, given the unprecedented circumstances that we're operating in, Swift will move these documents for you free of charge. The typical first response we get back is, but what about the legals? What about the legal uncertainty? And what if my documents start in another platform? So I think the barriers are not necessarily specific to Asia Pacific. I think we've got themes that are challenges to us globally. And I think those challenging themes are really around the legal uncertainty, and standards, particularly standards around interoperability. So the UK Law Commission beautifully described it as how does one possess something that is digital, because to be digital is intangible, and possession is so important to so many of the documents in trade. And that's largely agnostic to jurisdiction. Of course, Singapore has now given us some legal certainty with the amendment to its ETA. But as we all know, trade cuts across borders. So for me, the technology solution is almost irrelevant if the users don't have that legal certainty. And then once we give them legal certainty, we need to help them with interoperability, because folks are going to use different platforms, different applications and so on. So for me, it comes back to legal uncertainty and standards that help enable interoperability.
Thank you so much, Louise. And I think it's such a powerful message. We have all of these great products. They are creating so much value for MSMEs, for businesses across the world, helping with some of the fraud-related issues we saw recently. Technology is a great way of mitigating that. And if we can get the regulatory changes, if we can get model laws like the UNCITRAL model law for electronic transfer of records deployed between both the importing and exporting nations, the value of all these platforms are going to massively increase, and the impact on the actual end user, the MSME, is just going to be so much more powerful. So I think with that, I'm going to transition, Yukiro, to you for the next question that we have from the audience. And that question is, let me just quickly pull it up. You mentioned going from paper to digital will be difficult. Where do you see the main issues? Is it a bureaucracy problem?
Yeah, same kind of question, I think, as Louise mentioned. It is a bureaucracy problem. It is, I think, it's up to the government to change the laws and regulations to accommodate the digital trade. And it's not just about one country, as Louise mentioned. It's a cross-border thing. So, for example, if we take ASEAN, we believe that the framework, the infrastructure should be similar across the region. So those are the kind of hurdles that we'll probably see in the future. A unified ASEAN infrastructure will be very powerful, I think. And that a lot of the trade in ASEAN is actually done within ASEAN. So it makes a lot of sense to have a common platform in that sense, I think. The other thing actually I want to mention is what Oswald just touched on. Having a digital trade platform is going to be very, very powerful for MSMEs. It's going to allow them to just, simply plug in and access to the rest of the world. And it's going to give a lot of great access to global trading for MSMEs who may not usually be able to access such borders in that sense. So I think it's the initiative is not just to reduce costs, but to increase competitiveness for the country. And in that sense, I think a digital trade platform, in our research, we felt that it's going to be very, very powerful for MSMEs, giving them access to global trade by simply connecting to a digital trade platform. Okay.
Thank you, Yoshiro. That's such a powerful message to that question, and just helping make the world smaller and helping to actually share the great value that we have from all of these capabilities in APAC with the rest of the world by going digital. So I have a question for all of the panelists, and it might be the final question. Let's see. Each of you have about a minute on this question. The ICC did a report last year, and in that report, it showed that the banking community viewed us as about 10 years away from true full digitization. So around 2030 is when most banks thought we would hit this point where digitization became commonplace within trade. So two questions for each of you on that. The first is, do you think it's 2030? And do you want to potentially give your own view on what you think that date is? And the second thing is, what do you think the one thing is that either the audience can do or you can do to help accelerate that date? And so let's start off with, I'll go through who I can see on the screen. Let's start off with Jean first.
There's an interesting saying on this subject. When you make predictions, most people falter when they make a prediction for the first 10 years. They overestimate the speed at which the changes are going to come. And then they again falter on the next 20 years when they believe that the speed of change is not going to be as great. And the second 10 years, it multiplies. It goes exponentially, actually. And we are, if you consider a number of technologies that we're dealing with right now, like AI, probably in its 5th year, blockchain in its 10th year, we're getting to that place where the exponential results are going to be seen more and more. And not to mention the COVID-19 that gave us all kick in the butt. So we're going to be digitizing at twice the speed, probably more than we've been digitizing before. That's my view.
I fully agree. Louise, what's your thoughts?
This is a fantastic question. And, I think it depends. And I think it depends on the role that the people in this room think that they can and should play. The speed at which we can tackle the legal uncertainty and the speed at which we can bring technology agnostic, unified, harmonized rule books to the table, like that which the Digital Standards Initiative is looking at. Those are significant catalysts for change. So I think, I would reverse the question and we need to ask ourselves, what role are we going to play? We've laid out a number of the challenges that exist, and removing that legal uncertainty and helping to accelerate initiatives like the DSI, and, striving for more open, more technology agnostic, more interoperable solutions could serve as a real catalyst. If we don't get that, then yeah, I could feasibly see it as a 2030 event or even longer. We have to look at the lessons of the past You know, trade digitization has been, it's not a new thing. There are new technologies, but the world has been trying to digitize trade for a while. And we have to reflect on the successes and failures there as we move forward and really ask ourselves what role we're all going to play in that.
Thank you so much, Louise. Yukiro?
Yeah. I think it really comes down to momentum. Who takes the initiative to drive things? In some cases that we've been looking at, we noticed that there's usually a consortium that is formed to help drive the issue and put things into place. These consortiums can consist of various companies and government people, but many voices, too many may be difficult, but as long as you have a lot of voices, it helps drive the show. And also, many voices can give opinions and things from various angles. So when you finally implement the thing, it's going to be safer, I think, in that sense. That's what we've noticed in our research, that consortiums are formed. And these usually end up being very powerful drivers to put things into place. And I think that might be the key. And I'm sorry, I really can't answer your question about when it's going to happen.
That's good. I must say, I appreciate that. Jess, last but definitely not least.
Thanks. Yeah, so I would argue that digitization of trade is already happening, and it's been happening for a number of years. So it really depends on what you're talking about. Is it full digitization end to end? You know, is it down from, you know, the customer, the receipt that they get, all the way back to the reconciliation with the tax network and you know, supply chain, all that sort of stuff? Yeah, that may be 2030, it may be 2040, who knows? But in terms of the critical elements, in terms of what we need to digitize, like what Monetigo is solving for duplicate financing, that's a digital process that just wasn't really available or on the radar a few years ago, and that's, you know, rolling out rapidly globally in the next year. So that's, you know, I think you look for the pockets of areas where digitization, the low-hanging fruit. And you start building these capabilities in this area, that area, and then ultimately it all meshes together. So, you know, it's pretty lofty to say it'll all be digitized by 2030, but I think a good portion of it will be digitized in 5 years from now. The important stuff, because we just can't afford to keep going with paper. It's too costly, as Yuchiro pointed out as well.
That to me is going to be a quote that I use. We can't afford to. So unfortunately, that's all the time we have for our panel today. Thank you everyone for joining. If you weren't able to get your question answered, please join one of the speaker booths. These really are some of the thought leaders in the industry. You really want to be able to talk to them about it. Knowledge on KYC, knowledge on moving documentation across the world from a research perspective, etc. So please do join. I'm now going to hand it over back to Jan. Thank you, Jan.
Thanks, Oswald. A brilliant job moderating, tons of energy. To our panelists, thank you so much. Really terrific insights. I mean, the key takeaways, certainly Jesse's reflection that digitization's already started. The debate amongst you is just how quickly we'll get to full digitization. And like other discussions we've had in this symposium, it's not about the technology. With AI and blockchain, technology's there. It's just whether, to borrow a paraphrase from Jean, that COVID kick can help us solve for some of the interoperability, the legal framework issues that are really going to move us forward. So with that, we're going to be moving into our speakers booth, where you can have a chance to have more detailed discussion with each of these experts. Links to each virtual room can be found below, as well as through the speakers booth tab in the main menu. In about 30 minutes, we'll be back in the main live stream for our final panel of the symposium, a conversation with leading global innovators in infrastructure. And this is no ordinary infrastructure. This is mainstream infrastructure that has a huge impact on our climate in a very positive way, and will support APAC economy's environmental and job creation goals as we move through the pandemic into recovery. So until then, enjoy your speaker booth conversations. Talk soon.